Michael Saylor, the CEO of MicroStrategy, one of the biggest companies in the world, a publicly listed company, has just taken out a $200 million loan to buy more Bitcoin. They already own $6 billion worth of Bitcoin. That's over 120,000 Bitcoins this company owns to their balance sheet. It's absolutely astonishing. And Michael Saylor continues to buy more Bitcoin and continues to be super bullish as they build up their balance sheet. I'm going to touch on why this is important and where this company is potentially going with their assets and where Bitcoin's going with more people following suit. Bitcoin up 20% against the stock market over the last 2 or 3 months with the macro uncertainty unfolding, inflation rates, the macro uncertainty of money printing, and with the world sort of in disarray, Bitcoin is continuing to be this dominant force amongst every other asset class. We're going to dive into that. Plus the biggest hack to date in crypto, over $620 million worth of ETH stolen from a play-to-earn game, Axie Infinity, which we're going to touch on today, as well as Hedera Hashgraph and some Cardano news. As always, I'm coming to you Monday to Friday. I'm on the road today, so apologies. I'm in the lounge room of my partner's house, just trying to stay on top of crypto and helping you stay on top of all the upcoming trends, all the most important news, so you, the busy investor, can make more important and more sophisticated investment decisions. And if you want more analysis from our expert team and you don't have the time, we've got a Collective Shift member platform. You can sign up for a 14-day free trial and get all of the latest research, as well as our investments, where we've got portfolios where we're physically buying and selling assets on a short-term, long-term, and NFT strategy, and they're performing, actually pretty well recently. So you can jump over and check that out. Apart from that, if you like these videos, please like and subscribe, and let's get into it. MicroStrategy takes out a $205 million Bitcoin-backed loan to buy more Bitcoin. So a subsidiary of Michael Saylor's MicroStrategy, has taken out a loan with Silvergate Bank using Bitcoin as collateral to get cash to buy more Bitcoin. It's pretty nuts. Michael Saylor, the CEO of MicroStrategy and MicroStrategy, have over the last, year or two, continued to buy and dollar cost average into Bitcoin. And with their new leverage buy, the company has increased its holdings to roughly 128,000 Bitcoin, more than $6 billion in Bitcoin on their balance sheet. He tweeted, "If you feel robbed by inflation, Bitcoin will give you your money back." So what we're seeing is Michael Saylor from MicroStrategy continuing to add Bitcoin on his balance sheet because he knows it is the best investment, best asset class as a hedge against inflation. If you think about some of these massive companies that have millions and millions, if not billions of dollars of cash on their reserves, on their balance sheet, if you're just holding that cash, every day that you hold that cash, the purchasing power of that cash continues to deteriorate. That's because of the US dollar and the amount of, the purchasing power of the US dollar. Because people and the government continue to print more money, the US dollar is continuing to be on the decline, and anything denominated in USD continues to decline. So holding Bitcoin is a hedge against inflation for you and I as consumers and people, but also for massive companies. It's even more important for these people because they've got billions and billions of dollars on the line. So Michael Saylor continues to buy more Bitcoin and continues to save in one of the best technologies in the world to do that, being Bitcoin. Now, over the last month alone, Bitcoin has continued to trend higher against the NASDAQ and the S&P. So we're looking here in the blue line, Bitcoin with the NASDAQ and the S&P. So this is over the last month. Bitcoin is up around 20%, 10-15% against sort of the stock market indicators. And Bitcoin has historically been very tied and very connected with the stock market, and the price sort of rises and falls, very similar to the stock market. But we're starting to see Bitcoin continue to be uncorrelated against the stock market. Bitcoin is starting to really become an asset class that is separated against these other assets. It's really finding its own as a decentralized, autonomous, trustless system where you don't need to have governments and people controlling the narrative on whatever asset, commodity, currency you're buying into. I think more people are coming and realizing that Bitcoin, in a world that's dominated by headlines of the war and inflation and rising interest rates, that Bitcoin is a safe asset class that will continue to rise over time. So super bullish on that front. Another chart where I think you'd really appreciate at the moment is really exciting. So this is a chart showing the percent of supply last active more than a year ago. So in the orange, it's basically showing how many hodlers, how many institutions, how many people that haven't sold in over a year are holding the supply of Bitcoin. And it has reached a point which it hasn't gotten to since September 2020. And that is about 60 to 63% of the total supply of Bitcoin is held by people that haven't sold in over a year. Dylan Leclerc here sort of speaks about. It's just incredible to see. It's incredible to see the amount of people that have super bullish opinions on Bitcoin that are not selling Bitcoin continue to lap up this supply. That, we've got more than half of the total Bitcoin supply held by people that aren't selling. It means that there's less liquidity, less supply on exchanges for when retailers come in or more institutions come in and want to buy Bitcoin. There's not that much there to buy. And normal supply and demand, if demand is really outpacing the level of supply, well, price goes up. That's just the reality of it. So I think we're going to see Bitcoin continue to take on this run. Very bullish at this point in time. Yeah, really exciting stuff. Although we are super bullish in the long term, there is always in the short term some things we need to be aware of, especially in the macroeconomics, particularly everything that's going on in the world with rising interest rates, the war, etc., etc. But another fascinating chart here with Checkmate, our on-chain analyst, has been talking about is around the bond and yield curve inversion. Now, long story short, the chart below is showing us the US 10-year bond minus the 2-year yield, otherwise known as the yield curve. So as you can see, we are approaching a 0% spread, which is what is known as a yield curve inversion event. Now, what this signals is the following. Investors are selling the 2-year bond more than the 10-year, which drives up yield as bond prices and yield are inversely correlated. Investors thus seek more risk in the short term because of inflation, war, energy prices, etc. than in the long term. Higher rates make it for tighter monetary conditions, which in turn creates further economic slowdown. And the market's expectation is for more deflation in the long term. So as you can see here, the 0% spread on the US 10-year and 2-year yield curve inversion is nearly at 0%. What Checkmate is talking about here is the expectations for what happens if this hits the 0% is really that most likely we are heading towards a global recession, which is most likely to create both high volatility and probable downside risk in all asset classes. The Fed will continue to rise rates into a mess, exacerbating the problem, and eventually the pain of recession, unemployment, declining demand, etc. will overwhelm the pain of inflation. At that point, the central banks will most likely continue to turn the money printer to try and solve the problem, but it won't solve the problem. It will continue to sort of kick the can down the road. But as we've seen over the last couple of years, as more money gets printed in the economy, the assets will continue to go up. So luckily, with all this going on, we're seeing over exuberant asset prices, we're seeing inflation go up. Interest rates are going up because the government are trying to curb that inflation, but I think we're going to potentially see that recession incoming with that yield inversion curve. We do have a choice, as Checkmate's saying here. We have an immutable, perfectly scarce digital asset that responds quite well to the debasement of fiat currency. So as more money gets printed, the debasement of that fiat currency goes down, but we do have this fixed supply asset, this wonderful thing called Bitcoin, which isn't going anywhere, that continues to be a hedge against inflation. How do we think Bitcoin will reform during a recession? Bitcoin is a hedge against this monetary debasement, as we've spoken about. He believes the governments will respond to a recession with the only tool they have, which is printing money to debase the currency, and there is little appetite for austerity. As such, I believe Bitcoin is arguably one of the most sane assets in such an event. Now, bear in mind, this does not mean we'll have a correlation one moment where everything sells off like March 2020 between now and then. So we may see a bit of a sell-off if this continues to decline, but over time, as we know, Bitcoin is not going anywhere, and more people are understanding this is a hedge against inflation. MicroStrategy is continuing to buy. Goldman Sachs is buying. Some of the biggest asset managers in the world are buying Bitcoin because they're all waking up to the fact that the debasement of the fiat currency will continue to climb. Something else in the news recently has been around Bitcoin's environmental impact, and Ripple co-founder Chris Larsen is trying to change Bitcoin into a proof of stake to try and reduce the environmental impact, apparently, on Bitcoin. So the billionaire co-founder of Ripple roiled the crypto world on Tuesday with a call for Bitcoin to reduce its environmental impact. And he's bankrolling a $5 million campaign called Change the Code, Not the Climate, that will call attention to Bitcoin's energy use. The stated goal of the campaign is to persuade the scattered collection of people who maintain the Bitcoin network to replace its energy-intensive mining process with a proof of stake system that requires much less electricity and is used by some other blockchains. If you know Bitcoin, you'll understand that there is nobody you can go to change the code. It is no one central organization. This campaign has been calling on the likes of PayPal and some of the bigger players in the space, but they don't own Bitcoin. You can't change Bitcoin's code. You have to get more than 50% agreement by all the node operators, the miners, the developers, everyone in the system to vote that this is the way you're going to go. But why would you change the code? Bitcoin is the number one crypto asset on the planet. No one has come anywhere near it. Why would you change it? It's completely ridiculous, and they're going to be continuing to burn capital trying to boost up the XRP Ripple community and platform to try and shut Bitcoin down and change the proof of stake. It's just a narrative that is sort of boosting their own morale. Nick Carter tweeted, "As a Bitcoin node operator and member of the Bitcoin high priesthood that controls the protocol, I've duly considered Ripple's and Greenpeace's request to eliminate proof of work for Bitcoin, and I hereby deny it." This is a tweet from Ryan Selkis from Azari. Chris Larkin, who in just a society would be in jail for the bad faith investor misrepresentations he and his team made regarding the XRP sales, is spending money attacking the industry that created his ill-gotten multi-billion-dollar fortune. Yeah, Bitcoin, I don't think are going to budge anywhere. I think this is complete nonsense, and the environmental impacts sort of narrative is just a complete waste of time, and I think they're going to burn a lot of money trying to do it. Lastly, altcoin news. So $622 million from Axie Infinity's Ronin Ethereum sidechain has been hacked. This is a lot of Ethereum. 173,000 Ethereum has been stolen. That comes from Ethereum and USDC drained from the bridge that connects Ronin to Ethereum's mainnet. According to the report, the hacker, who was able to sign transactions from 5 to the 9 current validator nodes on the Ronin network, which is the threshold needed to approve signatories. Only 9 people on the validator nodes. I certainly don't know what it's like to be managing that amount of money. I probably would have thought there'd be more people actually holding the passwords and signatures on that, but that's sort of to be found out over the coming days as more information's come out about this. If you want a deeper thread on this, Smart Contracts released a thread on how that hack actually worked through the back door, and Axie overnight fell about 6 to 8% off the back of that news. Quickly, OpenSea confirms it will start listing Solana NFTs in April as well. This is big news. As you know, some of these platforms you can only buy selected collections on the different exchanges. So OpenSea has confirmed it will start listing Solana NFTs next month. Pretty big news on that front. Institutional demand for Cardano has exploded, so over 50x increase of the large transaction volume, which is valued at more than $100,000 since January. Per day increase has gone from $1.35 billion ADA per day to 69 billion ADA per day changing hands in large transaction volumes, which is a 51-fold increase. You can check out that tweet from Into the Block. Pretty big increase in demand there. And Hedera Hashgraph, I'm not an owner of this, but it's just another alternative to Ethereum, a higher, faster platform, is trying to get into the DeFi space. It's raised $155 million, and Hashgraph utilizes a DAG structure. The foundation says increases transactional speed and efficiency as more transactions are added to the network. Hedera processes around 2.6 million transactions per day, with transaction finalizing times of roughly 5 seconds. Some other protocols using the DAG distributed ledger of choice rather than a blockchain includes IOTA, Nano, and Phantom. So it's not a blockchain, it's a different type of mechanism to run transactions, and has continued to increase in popularity over the last couple of years. So that's it for today. Please let me know if you like these altcoin wrap-ups. If you like more Bitcoin, please let me know what you want me to cover in these daily videos. Just trying to keep you ahead of the most important news that I think you should stay across of. Please like and subscribe if you like these videos, or leave me a comment below if you have any feedback. And as always, if you want to see our analysts' thoughts and opinions, we've got an NFT drop we're getting into soon, which is minting on April 1st, which we're super excited about, as well as all of our buys and sells live, all of our alerts and our community. You can sign up for a 14-day free trial over at collectiveshift.io. That's it for me today. I'll be back again tomorrow. Thanks and bye for now.